In this video, I'll be giving a summary of the autumn statement that was passed a few days ago, and I'll be doing my best to give a full summary of the things that were not read out in the parliament during the budget reading. Just wait, stay with me to the end of this video, and you'll be able to see a lot of things that impact you as an individual or as a business owner. And I'm sure that this video will enrich your knowledge and give you a lot of breakdown about what was said and what was not said during the budget reading. Okay, welcome to my channel. My name is Tayo Olatimilei, and if you have not subscribed, please subscribe to this channel, and I'm sure this video will be valuable for you. Okay, I will be using, I have printed a few summary I'll be going through because it contains a lot of data, and I don't want to make a mistake with the data, especially because facts, we have to deal with facts and figures. Okay, let's start. So today, the autumn statement affected a lot of people, even though the ruling party promised that when they get into power, they will not increase taxes for working people. They kind of kept that promise directly, but indirectly, as we go on in this video, you'll be able to see whether they actually kept the promise or not. The things I'll be looking at in this video will be what has happened to individuals' earnings. Okay, I will look at what has happened to NI, employer NI especially. We look at the implication of the budget on ISA accounts. We look at those people who are living in council houses. We also look at that. That was not read as part of the headline, but there are implications for people living and who are intending to buy their council houses. Again, people sending their children to private school, VAT will be levied on private school tuition. Changes to stamp duty, capital gain tax, we'll talk about inheritance taxes, and a lot more. So stick with me to the end of this video and see how this might impact your finances now, not just now, and now it might impact the finances of your children later in the future. So the first thing I will talk about is the fact that I would say a bit of good news. There was no pay increase, which means that nothing will change in your pay slip when you get your pay slip at the end of the month. If you compare your pay slip before the autumn statement and after the autumn statement, nothing would have changed. It means taxable income threshold or bands they remain the same as you can see on my screen. If you're earning below 12,570, there will be no taxes. If your income is within the basic rate, you pay 20% tax, and if it's within the higher rate, 40% tax. Additional rates will remain as 45% tax. So, sort of good news, like I've said, but I think there are other ways where which this might impact you indirectly, and I will go into that as I proceed in this video. So, number two things that I will talk about is the fact that the existing any thresholds will be frozen until 2028. It means these tax bands that you see on your screen that I showed earlier, that will probably be on your screen right now, will remain until 2028. And this is a kind of indirect taxation on people. It's called step tax. You're being taxed, but you don't know you're being taxed indirectly. Because in the next 4 years, people will have there be increases in salary, maybe 1% here, 2% there. In year on year, there will be increment in your salary. And if you are within the border, maybe you're around 50,000 per annum, in the next 2, 3, 4 years, you likely move to the next band. And millions of people will be pushed into the new tax band as employers increases your salary, maybe in line with inflation. So that would definitely push millions of people into the next tax bracket. This will be an indirect tax that will come along the way, even though the government promised not to increase taxes for hardworking or for everyday working people. Okay, and number three, so I'm trying to make this as brief but as detailed as possible. Number three, which is another good news, is the fact that fuel duty will be frozen. Fuel duty will be frozen for this coming year. It means for fuels being imported or generally of fuel the duty on fuel that marketers are supposed to pay, there will be no increase. That does not mean there won't be changes to pump prices, because pump prices is determined by the forces of demand and supply. If there's war in Middle East, for instance, or if OPEC should cut the amount of crude oil they produce or pump per day, that could affect the price of fuel. Or if America, for instance, decided to open their crude oil reserve, that could also affect the price of crude oil, or and consequently the price of diesel and of petrol. But as per duty on it, there will be no increase in duty. Okay, that number four that we'll be looking at is ISA. For ISA account, the allowance for ISA account is 20,000. That also will remain frozen until 2030. It will remain frozen until 2030, meaning that even if you earn a lot more money, I know currently a lot of us probably don't max out the 20,000 across all our ISAs. But the more you earn, the more you want to save, but you probably won't be able to go above that 20,000 until 2030. And there was a new ISA that was introduced by the Conservative government called the British ISA. That's supposed to be additional 5,000 on top of the 20,000 allowance you already have, to enable you to buy British stocks and shares in British company. And that was the proposal. But that has been scrapped, so there will be no more British ISA. And the 20,000 cap or freeze has been around for a very long time, and it's going to be by 2030. It will have been frozen for 13 good years by 2030. That is not too much of a good news, but that is what we get. And number five is VAT on private education. So private school tuition will attract VAT starting from January 2025. If you look at people who send their children to private school, it's not as if they are super wealthy. A lot of them are hardworking, middle class people. Some of them, I know friends whose children are in private school. They are just, sacrificing, so that they can give the next generation of their children a better start in life. But here we go. They will be paying VAT on private education going forward. I learned a mother is trying to sue the government on that, but let's see how that is going to go. The next one I'm going to talk about, stick with me. I still have a lot to go into. The next I'm going to talk about is the right to buy discount. And now this affect people who are currently living or who will live in council houses. So when you have a council house to live in, there is a discount given to you if you decide to apply to buy this council house. You could get as much as 70% discount when you want to purchase the council house from the council. But this is being reduced. So let me explain how this works. If, for instance, you are living in a council house that is a house, if you live there for the first 3 to 5 years, you are entitled to a 35% discount on the value of the house. And then any additional year you live in the council house after then, you are entitled to an additional 1% extra on top of that 35%. Okay. And then if you were living in a flat, you get a 50% discount after living there for 3 to 5 years. And after that, you get an additional 2% discount for every year you stayed in the house. Okay, but there is a limit, and the maximum is 70% of the value of the property, or the maximum discount that is meant for your region. So before now, there were two regions, the London Borough and the rest of England. So if you look at what the figure on your screen, if you live within London Borough, it's either 70% of the value of the house or 136,400. Whichever one is lower is what will be the discount that will be given to you. If you live in the rest of England, you could get as high as either 70% of the value of the house or 102,400. Whichever is lower is what is the discount that will be given to you. Meaning that, let me give us an example. Let's assume you are living in the council. You've been living in the council house for the last 20 years. The value of the council house is now 100,000. The very first 5 years of living there, you get 35% discount. It means you can buy that house if you want to buy after 5 years for 65,000, even though the real market value is 100,000. Now, for every additional year you live in it, you accrue an additional 1%. Let's assume you live there for 20 years. The remaining 15 years you lived after that 5 years, it means you will have accrued an extra 15% discount on that house. And 15 now plus 35%, that will give you a 50% discount when you want to buy the house. Let's assume the price of the house or the value of the house is still 100,000. That means you only have to pay 50,000, because that threshold is still below the 100K for the rest of England and 236,400 for London Borough. You only pay 50,000 for that council house. But going forward, what has changed actually is the threshold for regions. So the threshold has been broken down into different, the northeast, the northwest, Yorkshire, and the Humber, and the rest of them, to London, the southeast, and the rest of it. So the maximum discount you can now get is 38,000, 70% on the value of the house, or the maximum you can get 38,000. Some discounts are as low as 22,000. So that is a drastic change. In that, and that will take effect from November 2024. So you have to apply before November 2024 for you to enjoy the old discount. After November 21st of November 2024, this new rate will come into effect. I think that is a punch in the tooth for people who are hoping to buy their cancel outs down the line. Okay, if you can go on this on the link down here and go and check what is there. As you can see, if you go on this page, you can see what I'm talking about on this gov.uk page. On this gov.uk page, you can see what I was talking about. Okay, let's move on to the next one, which will be number 7. So number 7 is this will affect employers, and there are 3 ways, at least 3 ways I was able to capture from the budget that will affect employers. Number 1 is the fact that the secondary class 1 national insurance, popularly known as employers NI, will be increased by 1.2%. So that will go from 13.5% to 15% for everybody that you employ. And not for everybody, there's a threshold also for people who are earning above 5,000. That will be an increase in NI by 1.2%. That could mean a lot for businesses, especially people who have employed a lot of people. And that will also impact small businesses a lot. Another thing that will happen, which is number 2 for employer, is the fact that the threshold for employer to start paying NI has been reduced. So before now, the threshold was anybody earning 9,100 and below, you don't pay NI on them. Now that threshold is being reduced to 5,000. That means any staff you have that earns 5,000 and above, you have to pay this 15%, new rate 15% NI on them. It's likely that employers will reduce the number of hours that some of their part-time workers and young people will have to work, so they don't have to pay extra NI on them. Another area where employers will be impacted is the national living wage. That also has been increased. So before now, people who, if you look at the screen, you can see what the increase will be from 1st of April 2025. National living wage is being increased from £10.44 an hour to £12.21 an hour. That is a 6.7% increase in the living national living wage. If you look at 18 to 20-year-old, it's been increased from £8.60 to £10 an hour. That's a 16.3% increase. Or then if you look at age 16 to age 17-year-old, it's been increased from £6.40 to £7.55. That's 18% increase on the minimum wage you could pay people within those age brackets. And this will impact small businesses a lot. There could be reduction in how many people they hire. Okay, they might have to let go of some staff if they think they cannot cope with this new rate. Another impact is that instead of your employer probably increasing your salary by 3%, they might increase your salary by 2%. And the remaining 1% will be used to offset the increment in NI contribution that they are meant to make. So these are indirect way through which all these things, new policies and new budgets can affect you as a working person. How much employer offer in salary could reduce a lot of indirect impact will be felt by everyday working class people. Let's move on to the next one, and that will be number 8, stamp duty land tax. Okay, now let me explain what this is. Stamp duty land tax surcharge is what you pay on your second home. And to be honest, that was what we heard during the reading of the budget, but that is not the full picture. Everybody will be affected starting from next year. Whether you are buying your first home, you are moving into a new home, but you still have just one house, or you're having the second house, which is an additional house, everybody will be impacted with all the changes coming next year. I'm going to break this down for you. Just follow me. So, number one, your first home. The current situation is that if you are buying a house for the first time, so if you are a first time buyer, you don't generally pay stamp duty on a house that is 425,000 and below. Then you pay 5% on a house that is between 425,001 to 625,000. You pay 5% stamp duty on it. That is the current situation. But starting from 1st of April 2025, that has been reduced from 425,000 to 300,000. So if you are buying any house above 300,000 now, you will pay 5% stamp duty on your purchase. This is happening at a period when houses are very expensive, when house prices are going up. This threshold is being reduced to 300,000. There's a link. Go on this link, you'll be able to see more details on this. The next one is someone who is moving home. Let's assume you already have a house, but you want to sell that house and move to another house. Currently, you do not pay stamp duty on a house that is up to 250,000. You pay zero stamp duty on it. That will remain until 31st of March 2025. By the time you get to 1st of April 2025, that also has been reduced. Currently it's 250,000, you pay nothing on. Next year, that will be halved and become 125,000. So the first 125,000, you don't pay any stamp duty on it. But the next 125,000, you pay 2% stamp duty on it. And anything between 250,001 to 925,000, you pay 5% on it. I wasn't expecting that, but it's there. Now let's move on to those who have a second home, or those who are buying investment property, which was the real headline during the reading of the budget. That has gone up by 2% from 3%. As long as you are going to have more than one house, you're going to have more than one house at the end of the purchase of the building, you have to pay the stamp duty. And before now, if you look at your screen, if you are buying a house that is 0 to 250,000 pounds, you pay an additional rate of just 3%. And if the house is more than that, the next band you pay 8%, which is 3% on top of the normal 5% that you pay if you are not buying a second house. On and on, 13% and 15%, as you can see on your screen. But starting from October 31st, 2024 till March 2025, what you're going to pay is going to be you're going to pay 5% if the value of the house is up to 250,000, and then you will pay 10% if the value is above that to the next band, and 15%, then 17%. And it doesn't stop there. That will happen between October 31st, 2024 to March 31st, 2025. And beyond that, going anything from April, the 1st of April 2025, you will pay more. From April 2025, that threshold has been broken down further. So instead of 250,000, the first threshold is now 125,000, half of what it used to be. So if the value of the property is 125,000, you pay extra 5% on you pay 5% on that. If it's 125,000 to 250,000, you pay 7% on it. So if it's 675,000 to 925,000, you pay 10% on that. So that as the first two bands have changed. Beware of that. When you're doing a property transaction, you want to bear that in mind. This is a lot of tax for people who are trying to make homes available for young people who are renters, or for people who have chosen to be renters. I think this is a lot of tax that you have to pay for a second house. Okay, let's move on to the next one. And the next one is going to be number 9. Number 9 is capital gains tax, which is popularly called CGT. What's capital gains tax? This is what you pay on your profit when you sell an asset. So if you bought an asset for £10 and you sell for £15, after removing some expenses, whatever is left as your profit, you pay a capital gains tax on it. And this is going from, before now it was 10% for the lower rate and 20% for the higher rate. So 10% is going to 18%, while the 20% will now become 24% that you pay, and that will be your capital gain tax on asset that you've sold and you made profit on that asset. The next one is going to be number 10 is inheritance tax. Okay, that has also gone up, and other things have come into it. So number 1, inherited pensions will now be taxed. Okay, starting from 6th of April 2027, any unused pension normally which you're supposed to transfer to your loved ones when you pass on, or when you pass away, will now be subject to inheritance tax of up to 40%. Before now, the general rule is that when you pass this on in a tax efficient way. In fact, if someone passes away before 75, your family won't have to pay any taxes on your pension that they've inherited. If someone should pass on after they are 75, there is there is tax on it, but it's not counted as part of your estate for inheritance tax purposes. But going forward, your pension, the unspent part of your pension after passing away will be added to your estate for inheritance tax purposes, and that could be up to 40%. The next one under inheritance tax is the fact that the nil-rate band will be frozen until 2030. Previously, it was frozen until 2028, but that has been extended until 2030. Under the current rule, an estate might be liable for inheritance tax if it exceeds certain value. And there's what is called the nil-rate band. So if your estate is not more than 325,000, people who inherited this will not pay inheritance tax on it. But anything above that, they will pay. And that is being frozen until 2030. And come to look at it, this has been frozen since 2009, 2010 tax year. It means for the last 14 years, it's been frozen. It's going to be frozen until 2030. So that will be around 20 years that this has been frozen. In most cases, people pass on houses to their children. You can imagine how much the value of houses has increased in the last 10, 20 years. And you can imagine how much people whose house or inheritance have gone in beyond the 300k value, 325,000 value, and they have to pay inheritance tax. So by freezing that, that means a lot of people are coming to that threshold and they would have to pay. Other things I will not go into details about increase to train fare. If you are inheriting a farm, you will now be taxed whether the farm is profitable or not. The fact that you have value of land that is worth more than 1 million, you might be paying inheritance tax on that farm. You probably might have to sell the farm, and get out of farming for you to be able to afford to pay it. Okay, that will be the inheritance tax relief on private assets and businesses will be capped. The inheritance tax relief on AIM shares on the stock market will be halved. A private equity tax, which is called the carried interest, will be increased from 28% to 32%. These are different ways in which the current budget will affect you, from people living trying to buy the council houses they are living in, to people sending their children to private school, to stamp duty on your second home, and even people who are first-time buyers, people who are buying a second home, to capital gains tax, to inheritance tax, to NI for employers. All of these things are going to go up, unfortunately. I hope you've been able to gain one or two things from this. I coach on personal finance and investing. If you like this video, please like it. That will help my channel. And then please follow this channel so you'll be the first to know whenever I post a new video. Thank you.